Hi folks, welcome back. This is a weekend commentary for the ICT Mentorship for June 13th, 2021. All right, so thank you for your patience and your concerns and prayers for my daughter. She's been stabilized, so my wife's still with her, and we are going to resume our teachings tomorrow. But let me kind of give you an overview of what's happened and what might take place as a result of the beginning of trading this week. Monday, we have medium impact GBP at 9 a.m. New York session. On Tuesday, 8:15 a.m. GBP, high impact speaker again. 8:30 a.m. core retail sales and PPI numbers for the dollar index. And then we have the medium impact industrial production number at 9:15 for dollar. On Wednesday is 2 a.m. London Open, GBP, medium impact CPI number. 10:30 a.m. crude oil inventories. Watch the Canadian dollar at that time on Wednesday. You might have something you can study in response to the crude oil numbers coming out. And then 2 p.m. high impact FOMC economic projections and FOMC statement and federal funds rate. And then press conference at 2:30. So we treat this the same way we do with non-farm payroll. So we'll be wanting to do our trades on Monday and Tuesday, preferring to sit out on Wednesday, except for monitoring and paper trading that crude oil inventory number on dollar CAD. You can practice something on that with the 1 or 5 minute chart intraday. And Thursday, 8:30 a.m., medium impact Philly Fed manufacturing index and unemployment claims. And on Friday, 2 a.m. GBP, medium impact retail sales. All right, so here's the dollar index. This is our daily chart. And I was looking for it to make an attempt to run lower last time we spoke on Wednesday of last week. And Thursday, we didn't see much movement. And I wanted to see this range here get overlapped and traded below and attack the sell side liquidity here and make an attempt to get down here. The market chose to go back up into the fair value gap in here, which I find is interesting because while we didn't take out the high here, we did trade back up into it, and I would have expected this to trade above here, and didn't do that. So unless I'm proven wrong, and that's fine if I am, but I think initially this has just been a return back into this area in here, and I want to see, does the market show a willingness to want to move away from that lower now? Now, if we trade above it, this becomes an area of support, so it becomes a balanced price range. So we could anticipate if it trades above it, come back down in, find some support in here, and then make an attempt to run for the buy side liquidity there. And then we have a little bit of an imbalance there with the bearish order block. So if we have a continuation lower, in other words, if we reject this area and go lower. Now, I might be wrong, but right now looking at it as it is, Friday was just basically the one-day event. It didn't do a whole lot on Thursday, in my opinion. But Friday, it repriced up to here. And this is ahead of FOMC for next week. I'm not convinced this is a bottom. And all we're doing is work inside this range here from high to low. We're back at a short-term overbought or premium level. It went right back into the fair value gap here. So does it trade higher? If it does, then I'm going to basically tap out and say, okay, it's not likely to go down here. We have to consider this area here, and maybe even come back up and take out this there. But it'll have to come back above this fair value gap and then trade back down into it as support. If it shows that, then we're looking here, here, and here. But I'm not going to co-sign that just yet because I want to see if this is in fact what they've done, taking it back up to a short-term premium, because we're in a trading range. We haven't really moved out of it. It's a scalper's market. And it would be just like them to take it up there to make everyone think this is a low and start sending it lower into this week. And maybe I wouldn't be surprised if Wednesday, FOMC sends us below this low here, if not sooner. That's what I expect. That's what I'm anticipating. We're in the summer doldrums, so this is classic, typical June type of trading. July is going to be similar to it as well. But just anticipate majority of the clean technicals being on Monday and Tuesday, and then Wednesday it gets a little squirrely, if you will, because of the FMC announcement that comes out later in the day. All right, so with those levels transposed to our hourly chart, I'm focusing primarily on these levels here because this is where the liquidity is. I'm refraining from the really small detailed things that are really not germane to our focus right now because we're going into a new week. We don't know where we're going to open, and we have sell side here. This is that fair value gap it traded back up into, and this is buy side. Okay, so do we reject this, leave this high intact? Because look what we have here. We have high, higher high, and traded down. Yes, we returned back up into the fair value gap, but I would have rather seen, if it was going to go higher, take out that high on Friday, and it was not willing to do that. So we'll see if it wants to trade lower. Some of the levels in here I would like to see, if we do break lower, I'd like to see it trade below this imbalance and then find some resistance there, and then attack this potential low resistance liquidity run signature here for the sell side there, and then expand lower for the sell side below that low at this line. And again, these are levels that I just showed you on the daily chart, just transposed and carried over into the lower time frames. Now, if we trade above this high here, I would want to see it come back down in, at least touch the premium high of the fair value gap on the daily chart, and then show a willingness to trade there higher. If it does that, then I would consider taking any long on a small little fair value gap that it trades back down into, or institutional order flow entry drill that would send us up into buy side. That's how I would use that information. Trust me, what I just told you is a whole lot, and that's what I'd be anticipating if it was given that. If it rejects this area, I want to see this level give way and then come back up and touch at least the discount low of the fair value gap there. That would set the stage for me to anticipate something to go short on dollar. Again, I'm not trading the dollar, but the bias or my interpretation of what price should do for the dollar would be hinged on what I just said here. So I'm not interested in being short, not right from the beginning, until it takes out this fair value gap and trades back up into it. And it may not do that. If it trades through it and keeps going lower, it may not even give me an opportunity to do that, and that would be just a missed opportunity. But for me to be short, I don't want to go in here and just stand in front of the new week, because I could be wrong and it could be going higher. So what would I be waiting for? I want to see it trade through here, come back up and touch that discount low, and then I would look for any institutional order flow entry drill or fair value gap that fills after, or bearish order block that fills after, breaking through this and then treating it as resistance. Okay, and everything I said over here would be germane if the market trades back down into this level here and starts finding support. Dollar index 15-minute time frame. Again, not really calling any special detail to anything in here. We do have sell side liquidity here and the sell side liquidity there. So I want to see, does it again make an attempt to go lower, and if it does, we'll be using the ideas I outlined on the hourly chart. Euro dollar. Okay, these are the levels I'm watching on the daily chart. Buy side liquidity pool, buy side liquidity pool. The fair value gap, we traded down through it, and we took out previous week's Friday's low. So here's Friday, Thursday, Wednesday, Tuesday, Monday, Friday. We traded through Friday's low. I can't recall off the top of my head because I'm a little bit scatterbrained, but if I'm not mistaken, either it was euro or it was cable, one of the two. But if I said if we took out Friday's low, we'd be looking for the lower level discount PD arrays. We did trade through this low here, so I'm going to again watch and see what the dollar does. If the dollar does in fact start to react bearishly on that daily fair value gap and starts to pull lower, then this was just a stop run, and then we would be considering a run on this sometime this week. If we continue lower and come back up and touch the discount low here, that would, in my mind, be viewed as resistance, and then therefore I'm probably wrong about dollar, and dollar may be going for its buy side liquidity. And then I would look for this run into the fair value gap there. But it needs to come down below the fair value gap and then come back up into the fair value gap discount low. Treat that as resistance, and then any bearish order block or institutional order flow entry drill or small fair value gap on a 15 or 5 minute chart, I would use that to try to position myself short on euro to trade into this fair value gap there. Otherwise, if we just start trading higher, then this was just a run here, and my thoughts about dollar may be in line with lower prices. Euro dollar 1 hour chart, very clean, relative equal highs here. That to me looks too perfect. So I'm not sure if this is going to be attacked this week, but if we start to rally higher, I'd like to hopefully find something that would get me long to take that out and then attack that area here for buy side liquidity. We took the sell side liquidity out below there on Friday and didn't get the run through on the daily chart that I was looking for, which would be the opposite I was outlining on dollar from the previous midweek review. Completely collapsed down, attacked the sell side. So do we trade back above the fair value gap and find some support here? If we do that, then this area here becomes a likely candidate. If we trade lower and come back up into, and it might be doing it right now at the time of Friday's close, if it breaks lower, or if we gap down and we trade into the gap and fill it and start breaking lower, then the same thing outlined for returning back to this fair value gap discount low, treating it as resistance. I don't want to consider anything on Sunday, so don't think what I'm saying here is an invitation for you to go in and trade on Sunday. Okay, we want to see these types of events occur during the New York and London session on Monday. Okay, so that's a day parameter. We have to have that filter has to be in place. We're not entering on Sunday because we're in a hurry. Euro dollar 15-minute time frame. Again, nothing really important enough for me to bring any attention to in here, except for the relative equal highs in here. There's clearly a build-up of buy-side liquidity there. Lots of shorts have their position being protected with buy stops above that high and this high here. So again, focus on that discount low. If we trade away from it or gap down, watch that as potential resistance. If we trade higher, this level is going to have to start acting as support, and then look for fair value gaps and or institutional order flow entry drills that would send price potentially up into this area here. That's the way I would frame the marketplace going in. And yes, at this point, it does sound like plan A, plan B, because I don't have the information yet, or on Sunday's opening, it hasn't happened yet. So this is how I would play it, and I'm either going to be right or I'm going to be wrong. And the other one can't be used to say, haha, I'm smart, because I don't know which one it's going to do. Okay, so that way everyone knows what I'm saying here. It's very clear. I don't know, but those are the ways I would trade it and watch it and pan out if I was going to engage. All right, here's British pound. This market has been in a relentless trading range. Hard to come out of this range in here. I believe I said if we went through Friday's low, which here's Friday, Thursday, Wednesday, Tuesday, Monday, previous Friday's low, if we traded through that, we did that on Thursday. If we did that, my interest would be down here for cable. And to me, even if it does that and trades back down in here, it doesn't really break the market structure. It just gives us a nice discount, really deep discount on the daily chart. And it could do that and allow the euro to get back in sync later on. Doesn't have to necessarily do it at the same time. But if cable pulls down here and euro stays relatively bullish or consolidates, this move here may set up a trade for euro pound as a result of this being manipulated lower. I'm not terribly excited about this one, even though I think this could potentially pan out. It would be very tricky, to try to get in here and jump it and just be short right from the beginning of the week and Sunday. Look for the London Open and or New York session on Monday to set up some kind of resistance or short-term premium level on a lower time frame that might set the stage for a run into this over the week, or at least the course of the week going into FOMC. So this is why I'm indecisive, because it would make sense for me to see this go down in here on FOMC, and that would mean potentially I'm wrong about the dollar index, and the dollar index could possibly go higher. And that's the conflicting analysis I'm having. Okay, and if you've been paying attention throughout the mentorship, if there's times when my analysis concepts can be argued both ways, and I can make the case very strongly about how this could potentially be the objective for this week. Okay, that means in a symmetrical market that the dollar index should go higher, and if it does, that kind of like flies in the face of what I anticipate in the dollar, because I'm trying not to pick the bottom. Okay, so I don't want to pick a bottom and a top in market, and since the dollar index has been bearish, I am trying to avoid doing any bottom picking or trying to be smart or try to outsmart everyone and try to impress anyone, because I've always lost money trying to do that, and it's easier to trade with the longer term, higher time frame order flow. And right now we're in a consolidation, and I'm going to elect to always go with the previous order flow prior to a consolidation when we're looking at a higher time frame chart. With that said, here we've consolidated a lot. We've come down below this low with this low with that low has been violated. Now this low has violated that one. If we start higher and we don't take out Friday's low and just continuously press above here, then we're going to go probably significantly higher above this high and this high, because there's a lot of buy side liquidity resting above that. And go back to your last week's commentary and you'll see the level I had for the weekly chart for British pound. Okay, I just don't have it here. Okay, pound dollar on the hourly chart, you can see this. This is like an enormous amount of buy side liquidity. So we did come back down and took out the sell side liquidity there, ran through that, came back up, fell short of this high, and then rejected and came back down and completely closed in this small little imbalance back into the order block. So we got basically the mean threshold of the last down close candle. Split that in half, draw that in time. We hit that there. So do we see weakness right from Jump Street on dollar in a couple hours when Sunday's trading begins, and we see a gap higher on pound? If we gap higher, that to me is an indication that it wants to go higher. Look for it to try to fill the gap and then come back up in an attack here. That's the ideal scenario that I would like to see relative to the dollar analysis. If this pound goes higher, starts to move higher, and we get weakness on the dollar, I'm looking for this initially. Okay, if we don't see the market trade above this level here, in other words, we trade back up into it, pick up institutional order flow entry drill there, that could set the stage for a sell-off that goes below here, and then think of that daily discount fair value gap on the British pound, and then consider those higher time frame premium levels for the dollar index. All right, here's British pound US dollar 15-minute time frame, and again, nothing really exciting here except for this little imbalance. So it can be treated as resistance here. That sets the stage for a run below here for low resistance liquidity run signature. This high or low, then that low. This is low resistance, and it might send it lower there. I'd prefer it to trade back up and at least go back into the here for a institutional order flow entry drill, or at least touch the discount low, the fair value gap there. Okay, now it's be this one here, not this one right here. Extend that out in time. If we hit that and we do that in a kill zone and starts to break down, that to me would be indicative of a run potentially taking us down in below here for the sell side liquidity. And then again, thinking along the lines that that daily discount fair value gap on the pound dollar chart may be the weekly objective, and I'm wrong about dollar index. So I've given you a few scenarios, and I'm not trying to cover all bases so that way I'm right about something, because I'm not confident with my analysis, okay? But because I'm obligated to tell you, and it's the weekend, I'm giving you certain scenarios that I would like to see given the current market structure that's in place right now. But I'm also revealing that I'm conflicted because I don't want to pick the bottom on dollar, and I don't think it's bottomed, and I don't want to jump in ahead and have a really strong conviction made in front of you at this moment, because I have conflicting analysis in cable and conflicting analysis in dollar. So because of that, I get questioned a lot. How do I deal with periods where you don't trust your own analysis? That's not a weakness as a trader, and it's not a weakness in the method or system. It is an observation that you need to respect, because there are times that taking no position is a trade. And this is a trade. This is a safety trade. This is I'm not trying to lose money. I'm not trying to, invite toxic thinking about doing something when it wasn't clear. And you're being trained to learn to anticipate high probability conditions. I don't feel there's high probability right now, not one way or the other, not bearish for cable or bullish for dollar or bearish for dollar. There's no absolute comfort level for me to say, okay, I'm confident about this, and therefore I would be in there, because I can argue both sides of the equation here. I could see easily cable going lower, and I can see how the dollar was just taken back up into that fair value gap, and they'll probably send it lower as a result of that. Both of those conditions can be true, but they conflict. They can't be true together. That's my point. Okay, so either dollar's going to go higher or it's going to go lower, and cable's going to go the opposite. It has a really strong potential to go lower because of its daily chart discount fair value gap. For dollar to go higher, it needs to be really pricing through premium arrays. And if it does that, while I'm not willing to get into it now from a bullish stance, that would indicate to me that we probably have made an intermediate term low for the dollar, and therefore we may be seeing weaker prices for foreign currency for a number of weeks. Okay, so hopefully this has made a little bit of sense as to why I'm indecisive at the moment, but I'm telling you the scenarios I'd be interested in seeing and studying this week going into FOMC. Based on what we see in trading on Monday, when I sit down with you and give you your lesson, that will be obviously a different degree of detail now, because everyone has made it to month 5 in a new group, or you've been removed, obviously. If you come back in later on with making your payment, you can hear me now say these things. But as of right now, everyone that's paid and continued is at a point where now I can start talking about things that I've not been utilizing in the commentaries and or lessons, because it would just invite questions that I'm not going to answer because it's going to be covered in month 5 content, and therefore the subsequent lessons, month 6 through charter, they will answer questions that's going to be raised by what you've been introduced in month 5. But it would be crazy for me to have been talking about anything from month 5 content with traders with all different levels of beginning, because we were doing multiple enrollments, and it would just cause an influx of emails when we're already inundated with them. So just know that we'll be bringing in some more of the concepts that's introduced in month 5. So it'll make the lessons a little bit more richer and bring more understanding to you as you go through. Again, thank you for your patience and your understanding and your prayers. We had a pretty big scare. I'm thankful that the Lord has been gracious to keep her in his hands. And I'll touch base with you tomorrow. Be safe.